Hey everybody, this is Jose Blasco here. We are starting the session in a moment. Sound check, please. As always, the kind of like the little habit that we have is to go ahead and send a quick message on the chat box, just saying a quick hello. So that way I know you heard me, and therefore I know sound is good and we are ready to start on time. How are you, Siderman? It's good to see you. Ahmed, how are you? Good to see you, everybody. Again, 30 seconds to go, more or less, and we begin right now. I'm just gonna turn on the video stream as well so I can position myself here on the bottom right side of the screen, making space for the charts and everything else, but at least here I can be a bit more connected with you guys. How are you, Joe? Good to see you. Very nice. 10 seconds to go. Christian, how are you? Very good. Almost there. Very good. Time to begin, everybody. This is the top of the hour. This is Options with Options. My name is Jose Blasco. September 23, 2021. This is the date, and we are getting together to trade options, isn't it? Clive, how are you, my friend? I know you had a few problems connecting. I'm happy to see you are in. Not sure what may have happened there, but the important thing is that we are all now reunited here in the trading room. So as we begin, as always, I would like to highlight the disclaimer in the upper left side of the screen. Please read it carefully. This is important information. Read it completely. Do not skip it. It's important stuff, okay? The structure for the session, as always, trading is all about being mechanical. So we run our sessions mechanically as well. So we're going to be looking at market environment, understand what's happening, amazing moves in the market yesterday and today. We'll look at the trades that we have in the market right now. From there, we'll move into trade management and trade execution. Hopefully, we'll have plenty of time for execution. I believe the management today is going to be quite straightforward. How are you, Maka? Good to see you. Very nice. Perfect. Okay, so we are ready to begin. The session is now introduced. So let's begin with the analysis of the markets, okay? So what do we have? Well, we have a market. This is the S&P ETF, SPY. We have a market which is up by 1.31% today. Starts trading above the moving average. You look at your auto climate indicator and you can see how we now have a gray line pointing at the bottom part. And when you see that, typically this is the recipe for a change of climate. Okay, so we are not in a changed climate yet. Okay, the last dot we got is still red, is not blue, but indeed this is out of all the sessions that we have done together where I was envisioning based on statistics the market turning back up, and it didn't. Today is the session where the odds of this to happen are at the highest, okay, because we are already seeing that bottom vertical line pointing at minus 0.38 at the moment. Okay, so tomorrow probably when it's time to trade, you're gonna have a blue dot instead of a red dot, and the climate will be officially changed to up. Okay, very surprising. I will not make it too long because we talked about this for 2 weeks now, or close to 3 weeks maybe. But very surprising, this duration of the down climate, given the fact that statistics are pointing at 2 as a normal thing to happen. But next thing you know, we stayed, in a really multiple day climate to the downside, which was not expected at all. In any case, we are back into what tomorrow will confirm if it's an up climate or not. We also can see the implied volatility for the calls greater than the implied volatility for the puts. Blue is calls, gray is puts. All of these are great signs showing for potential continuation. If we look at the volume map, we can see slightly like yesterday, 1.5 positive, 1.7 negative, 1.4 positive, 1.3 positive. So, similar than yesterday, the ratio, if you compare calls and puts, is not that great. But the one thing that is happening today that did not happen yesterday, how are you, Mario, is that we are already at the same time of the day, we are now trading beyond the average volume from the last 5 days. Okay, and we can see this increasing volume, okay, on the calls, where on the puts we have a decreasing volume, isn't it? So all of this is looking good for tomorrow, really, to have a blue climate, and then a climate begins to the upside, and then statistics will suggest that's going to be 6 days moving higher. Okay, cool. So this is what we have, and of course, while the market is behaving this way, nothing too surprising if we look at the performance of the VIX, and we see the VIX, it's currently trading at 18.70, pretty major drop on the VIX from 21 yesterday to 18, which of course, it's the normal thing. When the markets go up, the VIX typically goes down. Good. So this is what we have out there when it comes to market conditions. So what's my plan? Well, since yesterday we entered a non-directional trade with Twitter, which was about collecting premium when the premium was higher at 21. We did that yesterday. Today the premium is lower. It's not like doing it again today is going to be wrong. But since we have done that already, so what I would like to do today is to look at the markets and ideally find both a long trade and also a hedge. I would like to find both. Why? Because since we are about to have a change of climate, or it's looking like we're going to have a change of climate to be confirmed tomorrow, then I would like to be exposed to long opportunities. And as the market progresses and that climate expands, those stocks would probably be driven higher by the S&P moving higher. So I want to be exposed to that in an early stage. But also, the climate is not confirmed, right? And therefore, I want to be cautious. So I would certainly be keen to also look for a hedge to add to my portfolio. And why is that as well? Well, because I'm thinking about what is it that we have in the portfolio. And we have Intel, which is a long, okay, and we also have Colgate Palmolive, which is also CL, which is also a long. Okay, so with those two trades being bullish trades, if I add another one, it's going to be 3 bullish trades, okay? And we only have ADM as a hedge, and we hedged the hedged by using shares, again, the options. So in other words, I would like to add a little bit more spice in case the markets crash. Why? Because again, the warning sign here, even though, statistics are there to be met and statistics are there to be broken. So, it's not surprising that sometimes statistics are not met. But at the same time, it's a warning sign that the duration of this down climate has been so long. And what is just slightly worrying, and again, worrying is just an English word, okay? You guys know how I express myself. I'm not worried at all, okay? It's just a way on how to say it. So the worry, if you wish, is coming from looking at the weekly time frame, where we may be at the beginning of a red climate, okay? Even though notice that we also have this gray line showing up in the bottom part, and again, it is indeed possible that next week this red dot is back to blue, so it's not that problematic. But at the same time, what if this is the beginning of a down climate? Well, if it's the beginning of a down climate on the weekly time frame, we're going to be falling for 2 more weeks, okay? And I don't want to get into a long with no hedge, and then that long is suffering for 2 weeks. That would be problematic. So that's why my goal today, as I'm going to be planning trades, is to find a long and find a short. That's going to be my plan for later when planning trades. How are you, Joanne? Good to see you. So, therefore, let's review our trades. Okay, let's review our trades. So what do we have? Okay, so we start with Intel. Well, to be honest, that one is very easy to understand. This is a trade which is making $15 of profit at the moment. So if we look at Intel on TOS, it looks like it's losing 32, but remember, it's because right now the only thing left in the account is a long call. Okay, we are waiting to sell the 60 call, but for that to happen, we need Intel to go higher. But again, we collected multiple profits before. So if I was to look at Intel and we compare that with what we had yesterday, so you can see Intel is higher by 1.10%. Okay, so nice that we closed that 60 call for 5 cents. Now Intel is back in business, going back higher. So if Intel goes higher, there'll be a point where we'll be able to sell again the 60 call for the same premium we sold it originally. That was 15 cents. I got the order there waiting to get filled. Okay, so nothing to comment on Intel, and unless you tell me you have questions, I'm just gonna continue with my analysis. The next one in line is ADM. Okay, and ADM, that one is a teaser, like big time, big time teaser. It's a good thing that we hedged the hedged, because then it would not do much for us. Okay, so notice that stock was falling like a rock yesterday, and now that stock is 2.3% higher and that stock belongs to a weak industry. So again, it's really a rebel stock at this stage, moving very fast to the upside, just to move very fast to the downside, just to start moving very fast to the upside again. So it's really teasing, and it's not reaching our targets, which are set at 63 something and all the way at 57.20. Okay, so we are not reaching any of the upper or lower end, and that's why I'm calling it a teaser. Because I mean, the good news is that if the market really pushes in one direction, so then we'll end up either being a little bit hedged if that direction is down, or end up with break even if the direction is up. So the trade is doing what it's doing, but it'd be great to see just a bit more decision on where that stock is going, instead of such a lengthy, long duration sideways market that is not really going anywhere. So, but again, we cannot control that, so we're just going to be patient with it. We have what we have, and we are doing what we need to be doing. Okay. So nothing to comment on ADM unless you guys have questions. I'm trying to do this analysis of trades fairly quickly so we can have more time for trades. Okay. But again, if you have questions, for sure, stop me and I'll take care of those questions. So now with CL, okay, so let's take a look at what's happening with CL. So CL today, it's up a very shy 0.2% up. Okay, 0.2% up. It's how high that market is. And again, this is quite surprising, and surprising not in the best way, to be honest, because that stock belongs, at least when we selected that stock belongs to a strong industry, strong group. And really the market is going like 1.1% today, and the stock is only managing to go up by 0.2%. So it's quite disappointing. Okay, and we really need to start seeing some movement on that stock, because if we don't start seeing some movement, then it won't be a very, very efficient trade. Okay, so far, as I said yesterday, we need to be patient, because right now nothing's happening, so it's not like you can do much either. If I was to just to do a little bit more analysis here, just to share my thoughts, I'm going to bring a race graph with what we have, which is a directional long butterfly. Wait a minute, I got a mistake here on the position. What do we have? Oh, sorry, guys, I got confused. It is not a directional long butterfly. Sorry for that. I totally got confused. It's so many trades, guys. I was convinced it was a directional butterfly, but it's not. It's we sold two bull put spreads to buy a call. Sorry for that. So when looking at this trade, okay, we have it here simulated. So we are in that stage, okay, where the stock is currently here. Therefore, the net P&L of the trade is negative 49.5. Again, not a big deal. We know the most we can lose is limited, and it's $177 is the maximum risk of this trade, as we know. I mean, we can also, I don't need to do what I've done. You can just look at the maximum risk on the right, 177. Okay, but now we need that stock to start moving higher. Okay, and ideally above 77, because the moment it starts moving above 77, you have now a more efficient theta helping the trade. Notice how now theta is negative. Okay, above 77, theta would become positive. And definitely if we reach 78 point something, so now we're going to be gaining so much more delta at a faster pace, where now we're going to really start profiting. So we need a move. Okay, the last thing we need from the stock is the stock to remain as quiet as it is at the moment. Okay, what can we do? Again, we can't do much. We just need to wait. Okay, see if the stock is going to move against us or it's going to move in our favor. If it moves against us, again, we could discuss some defensive measures, but that's not even happening yet. So we cannot do much, and therefore we just need the stock to start moving in whatever direction to be able to manage the trade. The challenge here is that the stock has done nothing. That's the challenge. So now, one quick observation I would like to make is, if I'm just going to remove the long call 881. Okay, so basically I'm just simulating the bull put spreads. So if you look at the P&L of the bull put spreads, okay, those are losing $6 only. Okay, so the put side, which is the side adding risk for the trade, it's basically not adding much risk. Okay, why am I showing you this? Well, because as the stock is doing nothing, and that's a problem, the beauty is that we are accumulating a little bit of time decay on the put side, not on the call, but on the put side we are, with the two bull put spreads we have, with 77 and the 76 put. And that time passing, it's making those puts to lose money. And therefore, while the stock went a bit against us and nothing really has happened, in a normal case, you would be losing much more capital. But in this case, the put side, which is the side of the trade that has risk, it's only losing $6. So in other words, if the stock was to move just a bit, given the fact that time has passed, we should be able now to collect profits enough from the puts to close the puts and be left with a call, which is basically free of risk. So that's the good news, that while that stock hasn't moved clearly in our favor, and therefore there's nothing we can do when it comes to trade management, the beauty is that time is passing and this is still somehow helping the puts. So now the key is, let's have Colgate-Palmolive to push a bit to the higher, and then we'll be able to discuss closing those puts to remove the risk of the trade and end up exactly in the same position as we are with Intel, which is basically a call, which is free. And now we just need the stock to move. Okay, and then of course, the moment you add a call, you can do things with it, like we did with Intel, which we sold a call against the call we own and things like that. So we'll talk about all of this. But so far, there is not so much to be done. Yeah, Maka, closing the bull put is too soon, because if you close it, you're gonna collect $11 of pain. But it's not even about that. It's okay to close it and just lose a little bit of money. Is the thing is that we sold the puts to pay for the call. So I don't want to close the puts unless the puts are providing a profit which is equal or better than what we paid for the calls. How much we paid for the calls? So for the calls, the 81 call cost us $61. So the moment we got a P&L of $61, I'd be very happy to close those puts, because now the profit collected from the puts are equal to the cost of the call. So now not only you remove the risk by closing the puts, on top of that, you collected a profit of 61, which is equivalent of the call cost. So you are indeed in a pure net break-even situation, no matter what. So too soon to close the puts. Okay. Nothing to be done with CL. What else? The other trade we have there is WHR. So with WHR, that was a non-directional trade, which I took wrongly, but still, from a management point of view, I do want to discuss. I took it wrongly. I mean, I did not negotiate my entry price properly, and therefore I got a terrible entry price. But in any case, even though this trade will make extremely little money, this trade is extremely likely going to end up with a profit. Why? Because the current price of that stock is right here. The expiration date is that vertical line right there. Okay, and statistics suggest that, when it comes to the purple area, the further away that stock should trade is, from here the top to here the bottom. Okay, and the current price is here. So in other words, we are very likely going to end up in a profitable situation in this particular trade. So we'll just let it be, and that's it. Okay. That's what we see. That is what it's likely going to happen to WHR. And the last one to review is Twitter. Okay, so this is the one we took yesterday. Okay, and Twitter, doing beautifully well. So it's indeed very well centered in the range. When we look at Twitter here, it's showing a P&L of $7 positive. Okay, so why is that? Well, if Twitter didn't move yesterday, if Twitter didn't move, okay, Twitter went up by 1.3% today. So if Twitter stayed where it was yesterday when we took the trade, the profit would be much more than $7. Okay, much more than $7 of profit. Okay, but Twitter has moved, which in the case of an iron condor typically generates a loss. But guess what? Even though it has moved, we are not generating a loss. We are generating a profit. And why is that? Well, reason number one is because we have accumulated some theta. So this trade is making $2.22 of time decay per day, just because time passes. But most importantly, what happened to the volatility? Okay, well, the volatility went down, isn't it? So if we look at in the specific case of Twitter, the volatility yesterday was at a level of 40, red color 40, where the volatility today is 39. So there is 1% drop in implied volatility plus some time decay. So even though the stock moved instead of staying still, we are still, showing a little bit of positive P&L. Again, I'm just making those points so you understand the mechanics of what are the Greeks, what are the various components behind the scenes that impact the options prices and therefore your P&L. But in this case, again, we have a trade here until October 29. So, the fact that we are making $7 now means absolutely nothing. Tomorrow the market may fall or rally or volatility may rise again, and the P&L will be fluctuating all the way to October 29. But again, this is something for you to be more aware and have a better understanding of how your options strategy perform. Very good. So, nice, Maka. Yes, Joanne, indeed. And like everything in life, we learn through repetition. So for sure, it's good that you do your own repetition, but also I'll be doing the repetition here in the sessions. Okay, so all of these things will become second nature, with practice. So not an issue. Great. Okay, so done with review, done with trade management. It is time to find new trades. So I'll take a sip of water if that's okay. If you have any question, this is the time to type it, guys. If you have no question, just type all good, and that would certainly help me as well to understand that you are following and all is good. Okay. So time to look for trades, as I was saying. Now we're gonna be looking for trades. And the type of trades that we want to look for are trades that are directional. Okay. And by the way, before I plan the trade, just a quick flash. Okay, just a quick flash for you guys to see. This will be enabled soon for all of you. Not yet because we are testing a few final things. But we have here the options volume map as a new search tool within our scans. Okay. So you know that sometimes I look at the volume map on the screen and I look at, certain values which are greater and we are above average and things like that. And this gives you a greater chance for the moves to continue, right? So again, this is one of the key questions, right? So when we are talking about directional trades, right? We are talking about, okay, so the climate is blue. Is it likely to continue? Yes or not, right? So the options volume map certainly is a great tool to also be able to measure and predict with more accuracy if that's the case or not. So we have developed, and again, you guys don't have access to this yet, but we have developed some filters that will help in that sense. But the moment we have finished all our checks and so on, you guys will be able to have these activated in your top as well. Okay, so no worries. I will let you know when that is. It should not be too long. Okay. Let me see. With you, Maka, Joanna, say question. Okay, this is Joanna and Maka. Ahmed say yay. I say yay too. Very good. Perfect. Let's continue. So let's go for the directional trades, everybody. So first thing we're gonna do, we're gonna look for some directional bias with the positive CIV spread. Yes, Joanne. I think that just like in sports, keeping you slightly outside your comfort zone is gonna make you better. Now, if I really go too fast, then it may be overwhelming or too much. And if I ever make that mistake, you guys make sure you tell me, Jose, you are going too far. You need to stop. And I'll pause some of the developments or the releases. Okay, it's okay. But at the same time, I think that I kind of keep you a bit more accountable if I push you just slightly beyond your comfort zone, and I will help you to progress faster. But again, talk to me, guys. Okay, either in the session or send me an email. And if I go too far, you gotta stop me. Okay, because all of this is to help. So if the effect is the opposite, then I'm not doing a good job for you guys. Anyway, so looking at top positive CIV spread, this is to get some bias, directional bias coming from the options side. Then we're going to be looking for options that are cheap. So we're going to start looking at mean less than 20. Okay. Then I got my price condition, $34. You know, this is the same as always. Then I'm going to look at my stock filters, and I will start being demanding. So I look at group, and I will want the intermediate term trend and strength to be strong up, and the long term to also be strong up. And I will also want the stock, okay, at least in the medium, to be strong up. Okay, I will want to see that. Later, these may return extremely few cases, and then I may need to be less demanding, but definitely always happy to be demanding at first. Second, I want to import my list. I skipped options filters because I am not scanning for options. I'm scanning for underlying symbols, so there is nothing to filter. When it comes to strength, I'm going to uncheck the strength, okay, because I am not looking for neutral strength or anything like that. So I'm going to uncheck that. When it comes to earnings, I want to give myself some time to get to some targets. So I'm going to look for at least 30 days. Okay, so exclude anything which is less than 30 days. Nothing on the start price range. And then with the auto climate, again, I'm going to be very demanding one more time. We'll see what happens. I want daily climates to be confirmed and sensible, and I want weekly climates to be confirm up. Okay, and I want it to be confirm up, and I want it to be early. Okay, and ideally, I want the daily to be near the 9 EMA. Okay, so it's time to take the trade. But again, all of these may result in no results because it's very, very demanding, and that's what I thought, especially given the fact that the S&P was falling. So, you know, that's maybe too demanding. So let's take a look at what happened if I disable the weekly request. Okay, and I got the same. So now the thing is that I don't know if maybe because the options are not cheap enough. So let me disable the options. Okay, so even if I don't have any option criteria when it comes to how cheap or expensive options are, I'm not getting returns. So I am being way too demanding given what's available in the market now. So I'm going to start on checking a few of the things. Okay, and therefore I want to start with auto climate, leave it as confirmed and sensible. I'm going to be looking at disabling the stock strength. With that one, to be honest, you can always leave it unchecked because the auto climate is doing a similar type of analysis. So you can do that even though, you know, again, going from more demanding to less demanding, that could be a valid choice. And then finally, now when I look at the group rotation, so given how strong the market has been pushing down, probably the midterm is not positive in most of the stocks. So I'm going to uncheck midterm and leave only strong and see, only long term, and see if that results in some cases. And as I was expecting, I do now have a few cases. Okay, now notice is not too many. Okay, it's really not too many. So, which again is normal. Okay, we need to understand the market conditions. That's why we start the analysis of the sessions this way. Okay, so now, since now I got some stocks, I want to double check what happens if I add my weekly climate. Okay, and I got none. Okay, so again, the push in the market to the downside has basically hurt many of those weekly climates. Okay, and therefore, you know, we're gonna have to forget about it. Okay, so I'm just gonna rely on the daily climate, which is good enough. We have our industry, which is strong in the long term. We have a collection of symbols. All of those are valid. Earnings are reported 30 days or beyond. All of this is great. So now what I want to find, ideally I will find them, is cheap options. So I'm going to go back to mean less than 20. And this gives me only one, which is Marvel. Remember, there are three ways for us to assess how cheap or expensive options are. This is technique number one, which is the mean, CAV mean, less than 20. Okay, that's the first technique. So I'm just going to go with it. Okay, I want to click Marvel, okay, and do the analysis of that stock to see if we can get into this trade or we cannot. And the answer is yes, it does look like it's good to go. But before I get too excited, I want to look at the implied volatility calls and puts as an average. And yes, indeed, the blue is above the gray. So Marvel is looking good. In that sense, the only problem I have is that stock is currently trading at 63 and our entry should be around 62. That's where the entry should be. And we are far. So planning the trade now, it's not ideal. Okay, it's not the perfect time for me to plan the trade because I'm far from a potential entry. So I'm gonna go back to the matrix and try to find stocks which are nearer to the entry, and that's what I would prefer to trade. If I were to find nothing at all, then we can always come back and then plan the trade. So let's go back to my price options price expensiveness, if that's okay for me to make up a word, filter here with a scan number 2 to look for a second way on how to look for cheap options, which instead of looking at the mean is less than 20, I am going to move to the mean minus the historic volatility is below 2 standard deviations, which is another way to look for cheap options. And in this case, we got nothing. So what is my third choice? Then my third choice is going to be the top decrease in the CIV mean in the last 5 days. Okay, that's going to be the options that became the cheapest in the last 5 days. And those are the ones that I could target, and I got nothing as well. So what does that tell us? Well, this tells us that everything else got options prices, which are either, let's say, fairly priced or expensive. And in that sense, nothing is that attractive, to be taken as a regular option spread, such as a bull call spread, because then you would be getting plenty of Vega exposure that could hurt you when the volatility goes back to a cheap level. You don't want to buy when the price is fair or expensive. You don't want to buy premiums, okay? When the price is fair or expensive. You only want to buy premiums when the premiums are low. So what do we do when we run our 3 techniques on how to find cheap options and we got no returns? What do we do? Well, what we do is basically we don't care. Okay, we go for none, and now we got the whole list. And then what we're gonna do is, instead of building bull call spreads, what we're gonna do is that we're gonna build directional butterflies. That's what we're gonna build. Okay, that's what we're gonna build. And I think I'm missing a lot of messages on the chat box. Let me catch up with that, guys. I was just focused here on the trade, and maybe I was missing some of your questions. Keep pushing. Thank you, Christian. Very good. Thank you, Joanne. Joe, the only way to learn option is to push it. Nice, Joe. I love your devotion, guys. You guys are the best. Maka, Joanne. Okay, you guys sharing contact information. Very nice, guys. I love this. Okay, you guys team up. Be a team. Okay. Maka. Yeah. Indeed. You're talking about the Discord. Yes, perfect. Yeah, Maka is a Discord expert, and Discord is a great platform for you guys to meet when we are not running sessions here and interact. Okay, exactly, Joe. So we're gonna go Vega neutral thanks to the use of directional butterflies. That's gonna be the plan. Okay, so let's do it. Okay, so I'm gonna be looking at those charts. I'm gonna start with Arna. Arna is relatively close to the EMA, but also with a quick look, I can see 6 out of 6. That climate is looking like it may get exhausted quickly. Okay, so not the best. Twitter may be a good candidate, even though it's not, because it's far from the EMA. So it's the same problem as what was it? Marvel, isn't it? And therefore, I'm not gonna look into it. But also, I wouldn't look because we already have an iron condor, so I don't want to confuse. Garmin is a bit closer to the EMA, $2 above the EMA, and it is just beginning a climate. Okay, so this would be my favorite pick so far. General Motors, nice one as well, even though it's just a bit too far from the average. What about McDonald's? Yeah, similar setup, not too bad. CRM, well, that one is way too far from the EMA, so we're gonna leave it alone. Applied Materials, not too far from the EMA. Nvidia, this could be my favorite pick, maybe. 223 to 19, not too bad when it comes to where it is at. And then SPG, it's further away from the EMA. Okay, so the problem we have is that because the S&P is pushing so hard, So the stocks that are strong, like Nvidia, that were already above the EMA yesterday, that was not the case of the S&P. So now they are extending themselves beyond the EMA. So, so that becomes a little bit of a problem. But at the same time, it's not too far away. It's a 200 plus dollar stock. We just need that stock to fall for, $1, $2, $3, and then you're going to be in a trade. This could certainly happen later in the day. Okay, so let's go ahead and focus on Nvidia. We need UFOs, okay, for this trade to be taken. Our reference point is 219.54. This is our reference point. We would like to find UFOs at 219. There is no UFO here on the 55-minute time frame, so 55-minute time frame will not work. What about the 89? So the 89-minute time frame will give us, okay, I didn't say as well, but when it comes to the implied volatility, we got 35.33 versus 35. So the blue is above the gray. So that was good too. Okay, so on the 89, we got a UFO there located at 216. 216 is below 219. Okay, so then it's not in the right location. So the next one to use is going to be 144. So let's look at 144. I'm using multiple time frames using fib numbers. So we also have a UFO, but it's located at 213. What about 233? Next fib time frame. Keep going higher in the time frames. So this is located at nice to see you, Furman. I'm just realizing you're here, my friend. Sorry for not answering to you earlier. No UFO here. 377. This is the last one I'm going to use when it comes to intraday, and then I'm going to move to daily time frames and so on. So we got here again 213. Okay, so from an intraday point of view, the challenge is I didn't find any UFO. So if we look at daily time frames, we have a UFO at 214. Okay, so that's great, but it's not lining up with 219. If we look at the 2-day time frame, no UFO. If we look at the 3-day time frame, the UFO is all the way to 205. So my friends, no UFO. The problem is no UFO, and therefore no trade, even though Nvidia was looking okay to plan the trade. So we have no UFO, so we cannot. So then we're gonna continue, go back to the list and review. Was it no, not McDonald's? Was it Garmin? I think I said yes. Garmin is also like $2 away from entry. 23.33, 22.67. So again, the blue is above the gray, the climate is correct, and 169 something is our reference. So with that in mind, we are looking at 169 something, nothing on the 55-minute time frame. What about the 89? We got one, yeah, perfect, that's it, we got it. That UFO there is in the perfect location. Oh, but we cannot take it because the probability is 48.86. It's not 50% or more, and therefore we cannot take it. Okay, so I'm going to go for the next one, 144. Looking for a time frame with the right probability. Now we got 50%, but no UFO. What about 233? Okay, just waiting for the data to be downloaded. We got 168 almost, okay, but not good. What about 377? No UFO. So intraday time frames are not giving us what we need. What about the daily or the 2-day time frame or the 3-day time frame? So the daily is giving us, yes, the daily is good. So we got 169 to 164. Probabilities are 59.63%. So that's great. That UFO is indeed valid and lining up with the EMA. Okay, so we have an entry. We just need to wait for that stock to drop from the current price to 169.92. Okay, to 169.92. So how are we gonna plan the trade? This, by the way, is something new. I am going to show you. Yeah, Christian, love it. You're working with me in parallel. You also found this one on the 2-day time frame. I think I said daily. Sorry if I said daily. This is the 2-day time frame. So how are we going to plan this trade? Because we've planned trades before that it was time to take the trade now, but this is a trade where we need to wait for that stock to fall by $2 and now, only now, it's time to take a trade. So how are we gonna do it? Okay. Well, first we're gonna do the same thing we always do, which is to call our spread select, okay, and plan the trade from here, knowing that the type of strategy we're gonna select, okay, the type of strategy we're gonna select, okay, it's right here, which is gonna be a long butterfly. Okay, this is the type of strategy that we are gonna use. Okay, notice it shows on the neutral, and again, depending on how you construct the butterfly, it could be purely neutral, or it could actually be directional, which is what we're gonna do. We're gonna build it directionally. Okay, but anyway, so here's the long butterfly. So this is the one thing I'm gonna do. Of course, it's all about setting the target. Okay, we need the target. So where is our target going to be? Right? Well, if we look at this 2-day time frame, for example, and remember to set targets using the speed bumps, it could be any time frame, it doesn't matter, as long as it's a relevant turning point. So here we have a relevant turning point. So if I click on it, it's projecting the target to be here around 184.21. Okay, so 184.21, something like that. That would be the expected target for this trade. Okay, that's where we're going based on the speed bump. Okay, so I said 184, more like 184.50. Okay, let's call it 184.50. So I'm going to use the strategy builder very quick, just to have an estimation. 184.50, an estimation of target date, which has just been calculated for me here as November 6. Okay, so November 6 is my target date, which I am going to input here. Okay, now of course for that I need to select an expiration date beyond beyond that. I'm going to come back to the expiration date in a moment. I just want to not to forget, so I just want to have the value there. So November 6. Okay, that's going to be the date that has been calculated for us. And remember, we want to make this coincide with the earnings. So earnings for that stock are happening on 10/27. So then we have a problem with Garmin, because earnings are likely going to happen before we reach the target. Okay, can you still get into the trade? Yes, but basically what we're saying is that you are getting into a trade where you're likely not going to reach target on time. So my point is, why would you do that? Okay, so I'm just gonna move, let me float this guy. I'm just gonna move to the matrix and look for another stock. Okay, so what else was there? Was it General Motors? 51, $1 drop in a $50 stock. That's a pretty big move. What about Arna? Well, that one we said the climate was a bit tired. Yeah. So guys, you know what? I'm not happy with what I have. I'm not too happy with what I have. And therefore, I'm going to approach my directional trade differently. And you saw me do that before, meaning that, in a perfect world, you are with the climate, all of those things. But when that's not the case, then what I like to do is the complete opposite. I like to look for opportunities where some stocks are just being killed, okay, and then get into a strategy such as what we have done with Intel and Colgate-Palmolive, which are stocks that were falling hard, and we got them as they were entering a speed bump. Okay, so I'm changing my directional strategy here since the trades I found are too far from entry. It's going to be a waste of time for me to plan the trade and then we cannot execute. So instead, I'm looking for trades to be executed quicker or sooner. And therefore, I'm going to look for reversal signals and I'm going to look for speed bumps of support. That's what I'm going to be looking for. Those are going to be stocks. And I need to filter beyond that. But those are going to be stocks that are, in a position where they've been falling and they are inside of some sort of a speed bump. Okay, so let's see if we can find those. So strength, I would indeed like the strength of the group, the industry of those stocks. I would like it to be strong, so that I'm not going to remove it. Okay, the list is the same, earnings are the same, But then the auto climate, okay, what I would like to see is instead of seeing an auto climate which is confirm up, I would like to see a confirm down auto climate which is late. Okay, in other words, it's been super exhausted to the downside, and price just got into a speed bump, and we don't have any of those. That's very extreme. So what about a hopeful one? We got one. Okay, wow, the market is a bit stingy today by giving us opportunities, but we found one. So electronic arts is been falling. We should see many red dots. Okay, so 6 is more than 5, so it's hopeful. It's been falling a lot. Okay, and as it's been falling a lot, that stock is supposed to be on a speed bump. So let's take a look at where the speed bumps are. So I guess that the obvious one, maybe since I was using the 2-day time frame, maybe I should go back to the 2-day time frame. Doesn't really matter, but here we go. So we are inside of a speed bump. Okay, fortunately there is no UFO, so then I am indeed not inclined to take the trade. Okay, so I'm gonna continue working, guys, and those exercises. Okay, sometimes looking for opportunities, with top, it's very fast because you can scan for so many things. So looking for opportunities is very fast, but at the same time, in cases like today, so the market is not giving too many. So then you need to get accustomed, and this comes with practice. Okay, you need to be accustomed to kind of have like a how do I put it? Like wearing different hats. You need to get accustomed to change your hat very quickly, right? It's like, okay, so I was wearing the hat of trade with the climate. Okay, I didn't find any opportunity. I mean, there were a few, but not meeting entry now, so I didn't plan them. Because there was probably too much waiting time. Second, I changed the hat for, okay, so if I cannot trade with the climate, I want to trade stocks that are in a speed bump, that are likely going to turn and later on begin a new climate. So then I wanted to be there. But guess what? I found one, but that one is not showing us UFOs. Okay, so the one thing I didn't check is what if I uncheck auto climate. So that may bring one more, but it's not gonna be too significant, I believe. Yeah. So that one is not helping us too much, isn't it? So then the third hat I'm gonna wear. Okay, so just like when I'm looking for option premium, I show you that I got 3 techniques, 3 methods on how to look for cheap options, or 3 techniques or 3 methods on how to find expensive options. To pick up direction, I'm doing the same. Option number 1, go with the climate. Option number 2, find a speed bump. Okay, and what's option number 3? Well, you'll see. So option number 3 will be, okay, so I'm not gonna filter for anything at the moment, so you see the whole list. What I'm gonna do is I'm gonna look for strong stocks, okay, and I'm gonna look for the climate, strong stocks which are strong themselves, okay, but then I'm gonna look for the climate to be totally exhausted. So now I won't care if the stock is in a spin bomb or not, but I will care that the stock is completely exhausted. That's what I will care about. And then you will see how I'm going to play that, okay, with the options. But I want to make sure you understand the setup first. So let me bring some symbols and then I'll show you on the chart. So again, the climate is totally exhausted. So for example, if you look at, let's say, Cisco, so what's happening to the climate? Okay, it's red. So it's very exhausted. Okay, 12 out of 5. So what is double of 5 is 10, so it's 12. So it's very late. Okay, remember, late is more than hopeful. Okay, so I'm looking for markets that have been dropping like way past what statistics suggest, but they are strong themselves. Okay, they are strong themselves, and their industry is also strong. That's what I'm looking for. Okay, so if you look at Cisco, it looks like that. Okay, now how would I play this? Okay, well, I would play that with very similar with a speed bump. Okay, collecting the speed bump. I just clicked on the wrong place. Here we go. Okay, I'm not sure what I'm doing with my mouse. Let me redo that. Okay. Let me do it one more time. Here. Okay, guys, I'm not sure why is this happening. Maybe I'm not clicking in the right place. Let me do that again. Okay, here. Okay, so I don't get why I'm having this trouble, guys. So sorry for that. But in any case, if I project a speed bump here, we don't have green UFOs. Okay, so I'm going to go for another symbol. So let me demonstrate this with another symbol, because right now this is not the ideal candidate. So matrix, let's look at Facebook, for example. Okay, so Facebook, 8 out of 4. So very tired stock as well. Now, if we look at speed bumps from here, okay, we are outside of a speed bump, but there is a speed bump. Unfortunately, there is no UFOs. So I'm going to go for another symbol. Let me float this. Next one I'm going to look for is, what about Apple? So with Apple, some story, I don't have UFOs below. I'm looking for a setup with UFOs below. That's basically what I'm looking for. What about Lily? Okay, no, maybe. Let me see. If I do the speed bump from here, it goes where? It's there. It's very, very close, no UFOs. If I look at Nucor, no. Or yes, maybe yes. From here, yes. So with Nucor, it would work. Okay, I have speed bump lining up with UFOs. Okay, so this is the setup I'm looking for. Okay, so let me re-explain the setup. So we have been in a climate 16 days in a row where the climate is supposed to be 5. So double on 5 is 10, 16 is 3 times more. So in other words, that market is extremely tired in the way of going down, and therefore it's very likely going to show some sort of a turning point, which is likely going to be significant, okay, or at least to change the climate and therefore now start moving 6 days on the opposite direction. Okay, so that's the type of setup I'm looking for, and in order to exploit this opportunity, so what I would like to do is play it the same way we play it in when we look for speed bumps, like we have done with Intel or CL, Colgate-Palmolive. But the only difference is that now the distance between the puts and the calls are going to be more, because my speed bump is in a location where price is not inside. Okay, when we took the trade with CL, for example, price was inside the speed bump. Okay, and we basically created this trade when price was already inside the speed bump. But now with this trade, I forgot what stock was that, Nucor. Okay, with this trade, we are not inside the speed bump. It just happened to be that there is a speed bump below with UFOs lining up. So I'm going to play that differently. It's going to be a bit more passive, if you wish. It's going to have a bit less delta, and therefore be less sensitive to price movement. But I can still add positive deltas to my portfolio this way if I need to, which is what I said at the beginning of the session when I did my market analysis. I said I need positive deltas. So I want to do that. Okay. Now, in any case, I want to complete the exploration of the list. Okay, so if I look at Pfizer, where are we at? So if I draw the speed bump, oh, that's much better, because now it's going to be closer. So this speed bump is much more adequate. So yeah, I would, so far the setup I like the most is Pfizer. If I look at SO, it's a bit further away and it's not too expensive. Walmart, the UFOs are very far away. If I look at Brands, the UFO is very far away. So it seems that Pfizer is probably the best candidate to do this trade. Okay, so I'm just gonna go back to Pfizer here and focus on the last 5-10 minutes of the session on building this trade up. Okay, so where are we at? So Pfizer is currently trading at 44. We have this speed bump a bit lower. Okay, we have this speed bump just a bit lower. The speed bump is lining up with a UFO. So the technique I am using here is basically copy-paste compared to the technique that I use with Intel and CL. The only difference is that instead of having a setup where price is inside of a speed bump already, now price is outside the speed bump, meaning that in order for the move to take place, what may need to happen is that price need to come back to the speed bump, retest it, and go. That may need to happen. But I'm trying to minimize the probability of this to happen by scanning for late climates, 21 out of 7. That is a very, very exhausted market, and therefore the probability for a change of climate is higher than the probability for a retest of the speed bump. Okay, but I need to have the speed bump on the UFOs as a backup plan in case it goes there. Okay, so because the speed bump and the UFO is what is likely going to push it back up. Okay, so I need that on my chart, but I also need the stock to be very exhausted. And if I go back to the filtering condition I selected, just so you remember, so the difference was that when price is already inside of a speed bump, I don't care too much if the stock is strong or not. So I could have left that unchecked. But when price is not inside of a speed bump, I prefer to have the stock strong and its sector strong and the climate very, very exhausted late. Okay, why? To minimize the probability that we need to go back to retest the speed bump. Okay, if I'm already inside, then I'm okay. If the climate is not that advantageous, I'm okay. If the stock is not strong, as long as I got the UFOs, I got the speed bump, and the industry of that stock is strong, then I'm fine. But in this case, my risk is that the speed bump may need to be retested. So I'm trying to minimize the probability of that by looking at such an exhausted climate and having the stock and its industry to be both strong. Let me know if that makes sense. I said it relatively quickly, so you may need to watch the recording and make a note. Maybe you made a note already. Yeah, so this is what we're looking for. Mario, but the setup only on a 2-day chart? No, to be honest, you can do the setup on any time frame. I'm on the 2-day chart comfortably because the probability is great. So and I have a UFO, so I don't need to find for another UFO because I already got one. But you could actually do this setup in no matter which time frame. Remember that with a speed bump, even if I was to look for, let's say, the 55-minute time frame here, right? So if I look at the 55-minute time frame and I look for one of the important turning points on the same date, okay, so that was 17. So if I go back to the 17, which is right there, okay, this is where the speed bump was calculated from. So if I project that, the speed bump is going to be in the same location, which is 4270 something. So it's the same, right? So because it's the same, and I got a UFO there, so then I could just stop there if I looked at the 55. But I was not looking at the 55, I was looking at the 2, but I got the speed bump in the same location, and I got the UFO, so I'm fine, right? So it really doesn't matter as long as your UFO's got enough probability and the speed bump coincides with a UFO. Good, and thank you for your confirmations, everybody. So let's put the trade together. Okay, so let's put the trade together. So I'm gonna bring option chain tool. We're gonna look at Pfizer. We also need to look at earnings. When are earnings happening? So earnings are happening on the 26th. On the 26th of October. The target here is going to be crazy far. So if you were to project the target here, there's no way we're going to reach the target. There's no way we're going to reach the target before October 26th, which is earnings. So then what I would like to do here, I'm just going to be a bit daring, okay? And what I'm going to do here is I'm going to plan a trade past earnings. That's what I'm going to do. Why? Because the game I'm going to play is that I'm going to sell 2 puts and buy 2 puts to pay for a call. Somewhere here. Okay, you have seen this before, isn't it? I'm going to play this game. And the game I'm going to play is that before earnings, that stock will move somewhere higher, where somewhere where now I can go ahead and close those puts and be left with a long call at no risk. And then earnings take place, and now we may have a huge gap and it goes to the target. Because again, before October 26th, it's no way we're going to get there. Okay. I mean, at least visually speaking, I would say it's no way. Maybe I should not be that extreme. Maybe we can take a look at 55.15 and see what is the expectation for target. I would say is going to be, look at that. The expectation is March next year. Okay. So then the idea is to do a trade and expose ourselves to a pretty powerful move that may be fueled by the earnings report, assuming it's good. And if not, at least we got rid of the puts ahead of time. So then we are out of risk. And if the earnings were to push the stock down, so then we are not making money on the trade, it's okay. But at least, we are exposing ourselves for a great profit. Okay. And you will remember this day in March if we reach that target. Okay. In March or after earnings. So it's great to sometimes plan trades. Always have a collection of trades in your portfolio. Some of them are, kind of like nearer targets, but some of them are also trades that allow for these very, very powerful profits that then will really help the portfolio performance for when the market gives you 2-3 losses in a row, which this sometimes happen and will happen for sure. And, that would be very helpful. So what I'm going to do then, when I'm looking at my expirations here, and with that in mind, I would like to shoot for March. Okay, now this is 176 days to expiration. My concern is going to be liquidity, but Pfizer is looking okay with some strikes and not okay with others. Pretty okay. He's looking pretty okay. Yeah. So that expiration date looks pretty okay, actually. Yeah. So I have no problem to work on that expiration date and see what we can do. Okay. Okay. So with that in mind, so what are what is the location for those UFOs? Okay. Well, it's right here. Okay. We're talking about 43.70. Okay. A bit deeper here is 42.83. So maybe we can use the 43 put. Okay. The 43 put would be the one we would take. Okay. And if basically what I do is I sell the 43 put and get paid 254, and I buy the 42 put and get paid to 17. Let me get rid of this call here. So basically you're creating 43 cents of credit. Okay. So if I do it twice, so that's going to produce 85 cents of credit. So the question is, what can you buy with 85 cents of credit? And I need to add more strikes. And it seems that we could buy the 55 strike, which is actually where the target is. Okay. So just got a little concern there. Okay. Just got a little concern. I want to evaluate my probabilities because that strike seems to be way too far out of the money. That strike is only 12 delta. Yeah, so I'm not very happy with the setup. If I look at my risk graph, you'll see what I mean by that. And again, with these trades, it's not like your options need to be. Just give me 1 second. You see what I mean? So I'm going to move this to March, and I'm going to select the 55 call. Okay, and if you look at the ideal strike zone, so notice how the crossover point, it's totally outside the zone, right? So in other words, the 55 call is likely to not to produce any break even or better. Okay, so I'm not in love with it. And when you do these trades where you sell the puts and you buy the call, you always end up with less deltas, and it's not too much of a concern because then you reduce the risk of the trade by closing the puts. So I'm okay with that. But at the same time, shooting for such a far target where the 55 call is going to be so far away from that ideal strike zone, basically it's a bit too much of a utopia. And even though what I said about the earnings to act as a catalyst to bring the prices very far away, and we should have always some of those trades in our portfolio, Pfizer is not providing levels of premium that make me too happy to put this trade together. So then I'm going to change my plan and be a bit more conservative with this and shoot for a target of 48. Okay, 48. And the question is, so 48.24, if we were to get there, when would the expected date would be? And that is basically 1029. Okay, 1029. So here what I'm going to do is I'm going to still play the earnings in this way. I'm going to go for the expiration dates, which is, we said earnings are on October 26, right? Yes. So October 26. So the earnings expiration date will be October 29. So what I'm going to do is I'm going to pick the next one. Okay. So then whatever happens with earnings, if that's going to help for the price to push and get to my target, then I'm going to give this trade an extra week for this to be the case. Oh, yeah. Problem. No liquidity. 296,066, no liquidity. So then I'm going to do November 19, which is monthly. And there will be liquidity. Yes, 120, 117, that's good liquidity. So we're going to do the monthly November 19. That's the one we're going to select. And let me change that. So if I do November 19, 2 of the 43 put, buy 2 of the 42, we are getting 65 cents of premium. And that will allow me to buy the 47 strike. Okay, 47 strike, which is prior to the target. So I feel much better with this setup than the other setup. So if I buy the 47 strike, so buy this call, now we end up with a trade which is going to cost us $1. So the idea would be to place an order in the system for no cost, for zero. You may get filled, you may not get filled, you may get filled 1 hour later. You should be able to get filled. It's only 1 cent. It's not we're demanding that much. And now basically this trade is going to provide this particular risk profile. So that's the risk profile we have. Worst case for this trade will be to risk $200.50. So where is the risk coming from? Well, the risk is coming from the fact that you are getting into 2 bull put spreads with $1 strike price difference. So that's going to be $100 per spread, and you got 2, so it's $200 of spread. Okay, and if the cost is 0, like now, so then your risk is exactly 200. Okay, if the cost is $1, so then your risk is 201, right? So with a cost of 0, this is a $200 risk trade. Okay, and now if the stock starts moving, so of course now you start making money, as it's obvious based on this risk profile graph. So my friends, this is the trade that we're gonna add. Okay, I won't have time to have the long and the short, so we'll do the long. And again, this is Pfizer. So PFE. I'm going to bring all the data on the screen so you guys can have it all in front of you so you don't get confused. So we are using November 19 expiration. And I'm going to enter the trade by buying. I'm going to select a butterfly just because it has 3 legs. But immediately I'm going to change that to custom. So now I'm going to be able to change those 3 legs, and I'm going to do +1, -2, +2. On top is going to be calls, below is going to be puts. The one on top, I forgot the strikes, so let me bring these here. So it's 47, 43, 42. Okay, so the call is the 47. So the call will be the 47, and then we got 43 and 42 will be the put, and that shows now as a debit of 0. And again, my intention is to get in at no cost. Okay, so I'm just gonna pause here for a moment so you can take a screenshot, make a note. In the meantime, I'm gonna kind of like re-summarize what is it that I've done. So again, we had a little bit of trouble to find stocks that are in a treble place at the moment. So being directional immediately with stocks that were in a climate condition was not possible. So then we look at stocks that were in a speed bump. We didn't find any. So third choice was to find stocks that are close to a speed bump. Okay, close to a speed bump, but have UFOs within the speed bump. And we filtered for the strength of the stock and the climate to be in a position where the likelihood of the stock to have to retest the speed bump is low. And with all of this, we are now constructing this particular trade with Pfizer made of selling 2 bull put spreads below and using that credit to pay for the call, and therefore doing this trade at 0 cost, which may imply some waiting time today for us to get filled. Okay, so that's the trade. This is kind of a little summary of what I've done, and I'm gonna send it. Okay, and the trade is there waiting to get filled. The current mark is 0.05, so we are really close to 0. So, you know, I believe we should be able to find a fill during the remaining part of the day based on experience. That should be the case. The monthly expiration date also is more liquid than the weekly, so we should be able to find that. Okay. If we wanted to add size, it would be 2 calls and 4 puts. You are correct, Maka. You are correct. So the theta decay is not a problem because if you think about it, Maka, the puts are paying for the call. So the fact that the puts will decay is good for you, and the fact that the call decays is bad for you, but it's not a problem because the decay you suffer on the call is being paid by the puts, right? The fact that the cost of the trade is 0 means that you don't suffer time decay, okay? And if the cost of the trade was a credit, means that you enjoy time decay. In this case, we could not make it a credit like we did with Colgate-Palmolive or with Intel. We made it a credit. In this case, we don't start with a credit. We start with a 0 cost trade, even though as the stock moves higher, the puts will provide a profit, and then we'll be able to close them for us to end up with a call at no risk, like we have done with Intel, and we are waiting to do with CL. Wonderful, perfect. Okay, so I'll just wait here for this to get filled at 0, and I will say goodbye, my friends. I believe that the session is over. Well, actually, I need to copy this into the portfolio screen. So copy position to clipboard, go back to top. Don't need the option chain anymore. I will use the position window and all the way here, just adding a few lines, and I'm gonna paste Pfizer here. Okay, I'm gonna paste Pfizer here, waiting for this trade to get filled, which it hasn't got filled yet, and we'll be monitoring that in the following sessions. 9:25 for expiration. No, I was using 19, right? Did I make a mistake there? No, I'm using 19 of November. Okay, 19 of November, that's what I have, both on top as well as on the simulation. Okay, 19 of November, right there. Yeah. Thank you, Clive. Thank you, Mario. Yes, indeed, tomorrow it's a great, very special day for us. We'll be presenting top officially out there. I should have said it, to be honest, in the session today. You know, we just started, and I'm thinking trading. But yeah, probably you guys have received the email invitation for the webinar we're running tomorrow with a top presentation. So, I mean, it's not like you're gonna learn too much that you don't know yet because you guys are users of the platform. But yeah, in any case, if you have time and you want to join me, it's at 10 a.m. Eastern time, New York time, and you guys have the link. Anyone doesn't have the link, so I can paste it on the chat box now if you don't have it. But you should have it because that was sent in an email to everybody, so you should have it. But in any case, if you don't have it, let me grab the link and I'll put it on the chat box. Okay, you didn't see it, Maka? So I would like to suggest that you check your spam folder just in case, because if you didn't see that one, you may be missing other emails that we send. So check your spam folder, and if we are on the spam, just mark it as not spam so you receive the future emails. In the meantime, here is the link so you can register for tomorrow's presentation. And again, it's just going to be explaining to our community what is top and how it works, and you know what it can do for you and the advantages. We just got filled at 0, by the way, so perfect. So again, you got filled at 1. Okay. Okay, your broker doesn't allow 0 for limit. That's Interesting. Interesting. Okay. Well, in any case, one, I guess it's fine, right? It's not a problem. But yeah. So see you tomorrow, guys. If you guys have the time to join me, and indeed spread the word among your trader friends. And we are, by the way, also setting up. I owe a few of you that showed interest in becoming a collaborator with us to refer some clients and remember when we talked about the advantages of being a pioneer, right? So we are in the final stages of having our website with a few new technology we have added to be able to basically utilize your same username that you have on the website to basically auto create links for you so you can refer people to our website to subscribe to top or AutoUFOs or courses or anything else. And the moment they subscribe using your link, which could be, for example, tradewithufos.com/maca, for example, just using an example. So then automatically the website will keep track of all those sales that would take place, and then automatically you would receive auto payments in a monthly basis for that. Okay, so if you guys are keen to share and spread the word with your traders friends, so I mean you are doing a favor to them in the sense of having them introduced to a powerful tool, and of course assuming that it's is affordable from a budget situation for your trader friends. So then it's also helping you in the sense of collecting some money in this collaboration with us, which is, I believe, a win-win situation for everybody, because then your trader's friend could as well become collaborators too, and kind of create a little bit of a domino effect, referring serious people, because obviously top is for serious people. Anyway, guys, thank you for joining me today and for staying with me additional 15 minutes. I'm very excited for tomorrow. Between us, I will even say a little bit nervous for tomorrow, because it's the most exciting launch. We nervous in a positive way, those butterfly kind of feelings, because it's the most relevant launch we ever had since our company was formed and started operating. So very, very excited with that little feeling in the stomach with the butterflies. So looking forward to seeing you tomorrow if you have time. If you don't have time, of course, the session will not be of much value to you from an educational point of view, but for sure, it'll be fun to see how the community reacts, and I'd certainly love to see you there. Anyway, you guys take care, and I will see you when possible, either tomorrow or on the next Wednesday. Take care, everybody. Bye-bye. Oh, by the way, last thing, very quick, check the calendar on the website, because you will see now that starting in October, every Sunday, you have a top session as well, okay? So again, everything will be recorded if you cannot attend on time, but just know that it's all scheduled for October, and every Sunday we will have top sessions. My friends, you take care. See you soon. Bye-bye.